Fibonacci Mastery Class, Mastery and Awareness. I'll say that. Before we go any farther, I do need to direct your eyeballs to the bottom of the screen, please, where I will remind you that all material presented in this stream is for educational instructional purposes only, should not be considered trade recommendations or investment advice. Past results in trading does not guarantee future performance, and for everything I say, put up on the screen, hint at, in terms of risk and income, you can get full disclosure on it by going to tradingdisclaimers.com. Tradingdisclaimers.com. So paradigms, we all have them. Sometimes they're handed to us. Sometimes we create them ourselves. When most traders think of Fibonacci, they think simply, excuse me, of the Fibonacci tool that's built into most traders' charts. That thing on the charts they use for measuring pullbacks and retracements. But Fibonacci rules the charts. It totally dominates the charts. It's there in ways most traders will never see. It's no different than sitting at a downtown restaurant, being clueless of the many conversations going on and radio waves going right past our ears. Thousands of cell phone conversations, police radio, dozens of local AM and FM radio stations, ham radio talkers, pilots communicating as they fly overhead, and so on and so on. Fibonacci is just like that, with its presence on the charts usually not seen or even known of by most traders. But it's there, and its presence can indeed assist your trading. While some traders trade Fibonacci as a standalone technique, for the most part, it's best to frame its use as a confirmation tool. That is to say, if you have your own system for trading and it has its own signals and triggers, you can use Fibonacci merely to create confirmation. So, if you're newer to trading, tonight may very well overwhelm you, but never fear. You're never going to use all that is here with Fibonacci at once anyway. There's just simply too much of it. But the more you are in tune with the reality of Fibonacci's presence and dominance, the better trader you become. So, to be fully transparent, I am a new paradigm trader. I trade with precision. What and how I trade is a personal choice. It's surely not for everyone. But going way back, when I first started, I simply did the math and understood how a trader really makes money trading. And for me, the choice was obvious. So tonight's presentation is biased towards that new paradigm trader who needs precision tools. For many, those tools cannot be used in your trading, as they bring a level of scrutiny not necessary for what you do. But that's okay. You can still sit back and be amazed. So just want to make it clear, there's way too much to cover in one session. I'm not here tonight to teach you the many aspects of Fibonacci, but more so to familiarize you with them, so at least you know they're there on the charts, and you can attack them as you see fit. My IML TV sessions, Monday and Wednesday at 9, Tuesday at 8, are specifically there to teach the aspects of trading, harmonic scans, pitchforks, advanced Fibonacci, and waveology. So tonight we'll just spend some time on the Fibonacci part. But I remind you, there are no shortcuts. You pay your dues and achieve your depth and breadth of knowledge by learning, studying, practicing, and that all takes time. So set your expectations properly. In Outliers, Malcolm Gladwell suggests it takes 10,000 hours to become a phenom in any field of study. In my opinion, you could probably become an expert in 7,500 hours, and a generalist, if working hard, maybe in 2,000 hours. To size that up, 2,000 hours represents 1 man year. That's a typical salary job, 50 weeks, 8 hours a day, 5 days a week. 50 weeks at 40 hours, 2,000 hours. Most traders can't put in 8 hours a day, 5 days a week for 50 weeks. So adjust your expectations accordingly, not on what you hope and wish while seeing rainbows and unicorns and your ego, but based on facts and reality. Learning to trade is a life skill. It can be very fulfilling and profitable. All you have to do is 2 things. Make your commitment, then persist without exception. It's kind of my team's motto, persist without exception. So I said I'm a new paradigm trader, and so I want to just, in a general sense, give you the difference between the old paradigm and the new paradigm. The old paradigm typically has lagging indicators. There's a lot of slush. They have everything scaled up. So if you go from a 30-minute chart to a 60-minute chart to a 240 chart, your stop losses grow by magnitude. almost exponentially. Bigger stops and covers, you have a very low return on account per pip gain. A lot of traders think the measure of a trader is pips gain. That's not it at all. It's how many dollars you're making in that pip, regardless of capitalization and risk in the trade. They can be the same capitalization, same downside risk in the trade, but there's magic based on your stop loss. The stop loss is indeed not just there to stop the loss on a trade gone wrong. Your stop loss is truly your profit regulator in the trade. And this is something new, even intermediate traders often are not aware of. They think, oh, he scored 400 pips. Oh, he scored 200 pips. Well, it depends on what you're trading and how big that stop loss is. We routinely compete with traders who make 200 and 300 pip trades, and we make the same amount of profit in 20 to 30 pips. So it's about what goes on when you trade that way. So in the old paradigm, it's a much tougher psychological road. Okay? Strong challenges in growing your RAS, not having it confused. And if you hadn't paid attention last week or figured it out yet, if your RAS is not in sync, you're not going to become a trader. At least one that makes money. You're going to have an up and down equity curve in that old paradigm. It's slow growth. A lot of the traders in that 95% that don't make it bail out because they burn out. Even though they're successful, they're not making enough money. That's because of those big stops. That's also why they chase the pound yen during the London session. Got to make those big pips because you have a big fat stop loss. It's stressful. It becomes a chore. It becomes a job. Okay. New paradigm. We have real-time indicators, little slush. Our scaling is insignificant. We can jump from a 30 to a 60 to a 240 and not drastically affect our stop loss. We have very tight stops. We have the highest return on account per pip gain in the market, bar none. Our average trade is going to make 3 times, 5 times, even 10 times what the old paradigm trader makes in profits. Again, for the same size account, same risk as the old paradigm trader. We have a much smoother psychological road. It promotes consistent RAS growth. We have a smooth equity curve that points up very steep. You're going to have the fastest growth possible with the least amount of risk. It's fun, it's enjoyable, and it's something you can actually become passionate about. So that's the difference between the new paradigm and the old paradigm. Tonight's presentation is geared more towards the Fibonacci use for those in the new paradigm. So if you're an old paradigm trader, nothing against you. It's just you're not going to have a need for the kind of accuracy that we have with the tools that we have now. In fact, you're going to see them, and it's not going to make sense to you because your paradigm doesn't allow you to see outside that paradigm. You're not going to understand why we have 3 Fibonacci levels in a 12 pip zone. Okay, and I'm not talking about a 12 pip trade. So let's talk and get into it. I'm not going to give you the complete history of Leonardo Pisa. Fibonacci's kind of a conglomerate of his dad's name. If you think of the Europeans where you have Johnson and Robinson and those, sons of Rob and sons of John, in the geography from Leonardo, here's Leonardo of Pisa, his father's name was I'm going to have a hard time saying it by itself, Fibonacci. And so in the Genoese Italian area, the phi hyphen is the same as the son at the end of the name of Robinson or Johnson or whatever. So Fibonacci is really just the son of Bonacci, and so that's how the name came about. But we might know him for a couple of things. One, setting up the Arabic numerical system, decimals, etc. But he's also famous for his big question about rabbits. And the deal was he wanted to know if a male and female were just born and they were going to, have offspring, and then all the offspring would do the same in a 1-month cycle. At the end of 12 months, how many rabbits would there be? And including the new babies, the young pairs and the adult pairs, okay? And so he worked it out, month by month by month. And you could see how the total pairs between the new pairs, the number of adult pairs and the new pairs, how they grew. And then the totals became 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144. Okay. And then with the 233 and the 144, it became 377. So there's where you get the sequencing for the Fibonacci numbers. And of course, you can see here, same deal. You can just keep taking them out, and they get quite large. Okay, I think 987 is the last one I actually have memorized. So they start, you know, they get pretty big pretty fast, right? So that's the Fibonacci sequence. So there's something else interesting about the Fibonacci sequence, and that is when you add the number that you're working on with the previous number, it gives you the next number in the sequence. So 0 and 1 is 1, 1 and 1 is 2, 1 and 2 is 3, 2 and 3 is 5, 3 and 5 is 8, 5 and 8, 13, and so on. So a little bit of dynamic there with the sequence itself. So what do pyramids of Giza and Da Vinci's Mona Lisa have in common with Twitter and Pepsi? They are all designed using the golden ratio. Now, the golden ratio, sometimes called the golden section, the golden mean, divine proportion, and now here you go, phi. Now, here's the funny thing about phi. That's typically the Americanized way of saying it. A lot of Europeans will say phi, even though it's with an I. But that creates some confusion because there's another thing also called phi. So right now, we're just going to call it phi. And phi is 1618, 1.618. So let's talk about where that comes from. Couple of things. First of all, if you think of a measurement, and we're going to call this the whole measure from here to here. So we can call this section A and section B. And there's this reality that there's a point I could reach, a median point, and this is a cute little tool. If you go to mathisfun.com, you can search out this little tool. It's an interactive tool, and you can slide this back and forth, changing these numbers. That's always going to equal 100. But the relationship between the long number and the 100, and then the 38 point, or the smaller number and the bigger number, you reach an equilibrium where 100 divided by 618 equals 1618, and 618 divided by 38.2 equals 1618. And so you can just slide this back and forth, changing these lengths until you get 1618, and they both match up. So it's a measurement of a percentage of one against the other. And so again, 1.618, golden ratio, phi. So here's actually a Fibonacci ratio table. So this is what happens when you divide the numbers in the sequence. Same sequence, 1, 2, 3, 5, 8, 13, 21, 34, 15, 89, 144. So if I take, let's go down here, 34 divided by 55, I get 1618. And you notice the numbers before it are getting close. They're not quite there. So this really plays out as you move further on down the stream in the sequence. But 1618, so previous number divided by the number after it, or excuse me, the number divided by the number previous to it also gives you 1618 in that Fibonacci sequence. You'll also note other numbers that show up in these relationships. such as the 382, such as the 618, such as the 236. All right, kind of interesting. So there's two more relationships that come out of the Fibonacci sequence. One is a box and one is a spiral, and the spiral actually fits in the box. And you can see how that box is built, where the one box, look in the top left, and then the two box, the 1 and a 1 equal the 2 and the 1 equal the 3 and the 2 equal the 5, and then the 3 box and the 5 equal the 8, and it just goes on around making that box. When you draw a perimeter arc touching all the outside edges of all those boxes, it forms what's called the Fibonacci spiral. So two pretty interesting relationships. So what's interesting about the golden ratio? Now, I don't want to get, like religious. If you want to get religious, that's fine. But it's always fun for me, this is where chart woo-woo comes at play, to see the reality of the golden ratio and Fibonacci in our world. Okay? My own computer doesn't want to update very well either, so I don't know what's going on. Hopefully the transmission is going okay for everybody. So we got to start off with our DNA. And the length of a DNA segment at 1, its width is 0.618 of that. Our own human DNA. Going back to Da Vinci putting proportions on man himself as an average, is based on those same golden ratio and Fibonacci derivatives. And so you can see that in lots of things. Our fingers, our entire body, distance from fingertip to wrist to elbow. Our ears, Fibonacci spiral. Our eyes, very symmetry based to the Fibonacci spiral. Threw Trump in there just for a joke. Our teeth and the spacing between our teeth, the distance between our teeth as we see them. Most interesting is the human face. And this goes way back in time. I saw a special on Gaia, I think, and I can't remember which one it was because I'm a subscriber and I've watched hundreds of their videos and shows. But they took ancient carvings, all those pharaohs and stuff, and laid these Fibonacci masks that I'm about to show you on top of them, and you would not believe the symmetry and perfection that was there. And you're thinking these guys are hand carving this stuff with chisel 5,000, 10,000 years ago. In the fact that our DNA is based on the golden ratio. Our bodies are based on the golden ratio. We just have this inner, I don't know what you want to call it, but we're all about the golden ratio. So when we see things based on the golden ratio, we tend to find it appealing. So what's happened here in the last not that many years, to be honest, they've created templates, Fibonacci templates. And you can do this in Photoshop if you're a good Photoshop person. You can get these templates and put it on your own face. And what they've determined is that the more the face is aligned with these Fibonacci, the golden ratio, and Fibonacci derivative percentages, the more the face is aligned with it in a symmetrical manner, the more attractive we find these people. And, you know, we talk about pitchforks and to the pip touches. So these faces that have that, you know, just to the pip touch with their face dynamics are seen as the most appealing people. There's also other adaptations for the same thing. Since the human eye finds anything built on the golden ratio and Fibonacci appealing, some of the most renowned architecture in the world is based on that same golden ratio. Going back to Egyptian days, going back to the pyramids. Thousands and thousands of years, things built by that ratio. 618 to 382, even spirals. Now, where it gets kind of interesting is when you look at some of these spirals and symmetry that's golden ratio based, it's kind of amazing. And the stuff that gets me the most, well, all of it is interesting, but the stuff that gets me the most is when we get to astronomy. And you see things like when you put the moon on the Earth and you measure center point to center point to the diameter of the Earth, you know, here you end up with 1618. And that's not just coincidental. The ring, Saturn and its rings, all golden ratio based. Spiral galaxies, you can overlay the golden ratio, or excuse me, the golden spiral, they call it the golden spiral, the Fibonacci spiral. You can overlay it on these spiral galaxies, and it's the exact same everywhere you go. So there's a little bit of, again, depending on where you sit on your spiritual and religious side, there's some pretty interesting reality there. Now, you know, where you sit on that spectrum doesn't really matter. You have to acknowledge that there's something going on. And the reality is that something going on, you know, ends up coming back to our charts. So let's talk about charts and Fibonacci. So a review for many of you newer traders, some of this will be introductory. So a retracement is when we have a move and we go from one swing to another, or a breakout to a swing, reversal, whatever. This is a nice little Fibonacci move here. So when we want to know how far that may pull back in a correction before advancing, we load up our Fibonacci tool with standard Fibonacci ratios, and we can see the retracement from the top here can pull back 23%, 38%, 50%, 61.8, and so on. And so those would be corrections or pullbacks before price goes on. Now, here's what's really happening at these points. So in a bullish run, as the price starts going up, it's going to start buyers. Some buyers are going to start selling off, and eventually reach a tipping point where they start selling off, and sellers start entering the picture. Now the buyers are still watching this happen. As it starts coming down farther into the Fibonacci levels, the buyers have to make a decision that are still holding their positions. They're going to say, well, the bears are going to take over, or we got to get in here and add some to this pot to get the price going back up. So it's a little tug of war zone. And if enough sellers jump on and price continues to drop, then you see your buyers give up and price can drop. On the other hand, as it's pulling back, if the buyers in mass say, no, 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 this ain't going to happen, I'm not going to let this happen to my position, I'm going to advance my position more, and they buy, well, the same thing happens just in the other direction. The sellers slow down, the buyers start gaining momentum, and then the sellers give up, and the rally continues. Okay. So that's essentially what happens. So on a retracement, it's the move up, and we're looking at the pullback. We're measuring the percentage of the pullback. Just a side note, Fibonacci 50% is not a Fibonacci number. 50% exists merely because it's the midpoint between 38.2 and 61.8. So then we have something called, so for you guys that are more intermediate and advanced, these are from a 10-year e-signal study across all markets. So they've taken the reality of Elliott wave and measured it. And so in a 1-2 move, so what we have is a price comes down, it moves up pretty impulsively and pulls back. This is a 1-2 move. So what they're saying is they've measured that 2 move in terms of retracement before it turns around and goes back up to the top. A couple of things we know from Elliott wave perspective. Hey guys, don't worry if you don't know any of this stuff. And I'm going to go so fast you're not going to be able to keep up. That's okay. Don't worry about it right now. This is a familiarization session. Something we know about that 2 move is it cannot go below X, X being the origin of the 1 move. Or this could be a 5 wave, it could be a C wave, many other things. But starting afresh with the 1 wave, it's just typically called X. So X to 1. The 2 wave cannot come below that. It can come down 99.99999%, but it cannot go below the 1 wave. If it goes below the 1 wave, what's really happened is we've had a big move come down, and what we thought was now the start of an impulsive move is just a continuation of a correction, and this is going to move down. So if we breach this X line, the start of wave 1, this cannot be a 2. This physically cannot be a 2. So in the 2 wave, we know something now, and that is this. Whoa, Steve, can you draw straight for the... What I'm going to do is use solid lines. So we know there's some lines here. We got a 38. We got a 23.6. We got a 50. We got a 61.8. You know, we could put the 70s and 80s wherever we want in here. We also know we can't go below 100% retracement. So from an Elliott wave standpoint, we also know something else, and that is for a wave 2 to be considered a wave 2, it has to pull back at least 20%. So we've got a zone now between 20% and 100% for the wave 2. So what E-signal did is they came along and they said, hey, here's 23, here's 38, here's 50, here's 61. And so what they said was, we know that 73% of the time, that wave 2 is going to terminate between 50 and 61.8. It's a deeper set. Wave 2 is known as the deep and quick wave in terms of Elliott wave. So that's a whopping 73% of the time. We know it has to be at least 20. They say 24. It's really 20. So we can have another zone between the 20 and 50 that it gets to 15% of the time. 24 to 38. 60% of the time, 30, 50. Okay. So we can add it up, and the bottom line is I like percentages. I like percentages in trading. A good trader stacks their probability. This is why you use confirmations. So 73% of the time is a good number. You can measure that. And guess what? On smaller moves, that's a very tight zone. Right? Very tight zone. So we have an unknown area where price can reverse. So if I have some other support and resistance in that zone, price comes into that zone and bounces off that support and resistance. Okay, don't want to get too advanced. So we understand what retracements are. Price moves up, we're measuring the pullback. There's also a thing called projections. Now in the Elliott wave world, what they like to do is when I have a known wave, in this case 1, and we sense it pulling back, doesn't have to terminate yet for a projection. We can go ahead and predict where wave 3 will be. Okay? So we simply do a forward projection. This is not a retracement. Remember, retracement would be coming back this way. We take our Fibonacci the other way. We pull it down and give it big numbers. So everything we go here, as you can see, 100, 112, 127, 2, 140. So there's numbers going up. So that's how they can predict where there's a wave 3. Now, Fibonacci projections like that in terms of Elliott wave, there's studies on that as well. Interesting thing on projections. So there's kind of two camps in the Elliott wave world. One does their projections just as I showed you. They'll take their Fibonacci tool, they'll put it on. They like to call it wave 1. You're going to hear me say just the first major wave in a run. Well, how do I know this isn't the major wave, or this as it starts to pull back? Because it's going to be the bigger move up and a deeper retracement, wider retracement. You'll see it's obvious to see in this area of the chart, which was the first major wave. You don't have to be an Elliottician of that. Brand new traders, intermediate traders, you don't have to, in fact, I discourage you from spending any time on Elliott wave. We just want to measure that first big wave and project off of it. So that's camp 1 of how to do a projection to see the higher level waves in the Elliott wave world. There's another camp, and they're going to call them an expansion. They're going to use the distance of wave 1, as you can see here, that red stick, and what they do is physically pick it up and put the bottom of it at the end of wave 2. So they're using all the projections that came off this. They're just elevating them by putting them at the end of wave 2. In some ways, it makes sense. And then this camp bases those projections off there. So one can say, well, how can a wave up there have two different projection mathematics, to get to it? And the answer is it can't. So you have to become practical in your understanding of the math. Okay? And what I mean by that is what I will do after my first major wave comes up, I tend to favor projections. But as price starts moving up, we have this thing called compliance. That's what I've always called it. So maybe Steve Greger's the only trader in the world, but I haven't seen other traders give it a name, so I'm going to give it a name. So on this projection, I look for compliance. And compliance means things like, how many hits are these lines actually creating? How many times does it actually stop or congest price? And if I do a projection and I don't get a whole lot of really good hits, I'm a little hesitant about the projection technique working, and I'll turn right around and do an expansion on it. And now you notice some things with the expansion in this case, where there are some signs of congestion. In this case, a pullback, but that's after the fact. So you look for compliance the best you can, and there you go. Now, these aren't set in an entry order for this as a trade. I don't do entry orders. The new paradigm doesn't use entry orders. But you literally can have an idea of where price may go. You don't want to focus on it because that'll mess up your RAS, but you can set up in case. So it's not an emotional attachment. Oh, this is where it's going right here. Okay. But you say, okay, I see the general area. So now I can draw some pitchforks. I could look at other tools that I may have to say, well, when it gets up in this area, what's going to happen? So these are two techniques. Camp 1 uses projection. Camp 2 uses expansions. So let's talk about one more kind of Fibo. And it's something I want to say I invented, but it kind of has a funny ending story to it. So I was teaching traders, you can see the date of this one chart, 2010. Okay. So 10, 12 years ago, I was teaching traders, if you found a fork that was really good and price went above 100% of your swing. So in other words, we're doing a retracement, come down to here, this would be our zero line, and now we're going up 23, 38, 50, 61.8, 78.6, 88.6, 100%. So anything beyond 100% then, we're actually projecting up into this pitchfork. And I called it a fork Fibo. Now, the reason I say I stumbled on this and kind of invented it is I was working pretty closely with Timothy Morge at that time, who is, in my opinion, at my level, the preeminent pitchfork guy in the world. He trades all markets. He teaches pitchforks and's got, lots of students that have gone on to become pitchfork masters themselves. So I was sending Tim my charts with these forks, and he found it very interesting. He called it unique, etc. So I'm thinking if the preeminent pitchfork guy in the world doesn't know about these things, it's got to be something interesting. But the joke's on me, and I'll explain that in a few minutes. So anyway, fork Fibos, if you have a very good fork Fibos are going to be very, very accurate. Very accurate at picking peaks. No worry about It's not a measured move. We're just doing nothing but Fibonacci here. Don't get ahead of me. Hey guys, please don't write in the chat box unless I'm asking for questions. Because I appreciate y'all's interest and your all learned knowledge already, but a lot of times you're saying the wrong things. And other people see it and they don't know it's the wrong thing. So let's just stay with me at my pace, please. Thank you. So this is a fork Fibo. Very, very powerful tool. So if we take a harmonic scan based on measurements generated by Scott Carney in the 90s, we have something interesting. And let me do a little blackboard work here real quick, just so you see what we've gone over. We've done retracements. So that's a move up and the pullback against it. And then we did projections, which is an Elliott wave term. We've got wave camp number 2 that does projections, but they call them expansions because they actually move the measurement stick of the Fibonacci itself to the bottom of the 2-wave or whatever pullback we have. So we have expansions. Then we have fork Fibos. Now Carney comes along and mucks all this up. Thank you, Scott. Because one of the ways he measures the D, as you can see, one of the key measurements for the D and the entry line is the XAD Fibonacci. As you can see here for the ideal bullish Gartley here, that's a 786. But he also measures the BCD. Now, guess what? That's got to go beyond 100%. Which is why we have 127, 1618 as a range for D. But Carney, I think, never looked at Elliott wave because Elliott wave, when we go here and we're trying to project up to here, that's called a projection. Notice what's happening here. This would be a retracement. This is a projection. So Carney comes along and in the Fibonacci world just mucks everything up because what he calls BCD, he calls that a projection. Which is not what the Fibonacci crowd inside Elliott wave. A projection from BC would be going up here. This is a retracement that goes beyond 100%. So, sorry, Scott. Everybody I've ever taught Fibonacci to, we don't call them projections because that's already taken by Elliott wave. I call these extended retracements. Because the retracement is extended beyond 100%. And so it also allows us to have distinct terminology and not have terminology that means two different things. So extended retracements. So just as Scott Carney probably didn't pay a lot of attention to Elliott wave terminology, my friend Timothy Marsh and myself were not paying attention to Scott Carney's harmonic patterns. And this is where the joke's on me for saying I invented the fork Fibo. because this extended retracement, that is really what Carney calls a projection, but we're calling extended retracement. That extended retracement is the fork Fibo. If I have a pitchfork going from BC down, and I want to measure it once it goes below 100%, which I call that fork Fibo, goes below that 100% line, that is the exact same thing as an extended retracement. So when we get to the various names we have for the Fibonacci tool and the uses on the chart, the reality is fork Fibos and extended retracements are one and the same. It's just a fork Fibo is an extended retracement in a pitchfork. Whoops, not expansions, extended retrace. Took that the wrong way, sorry. So really we have retracements, projections, expansions, extended retracements, and then a special consideration for an extended retracement when it's inside a pitchfork, and we call that a fork Fibo. So those are the dominant ways to use your Fibonacci tool on a chart. Most traders that come on board, this is what Fibonacci means to them. That's it. So they're missing a good 80% of what occurs with your Fibonacci tool, or can occur with your Fibonacci tool. I saw some conversation the other day from some traders who think they know what they're talking about, and I don't mean anything derogatory when I say that, but, you know, look, when you boast, you're putting your neck out there. And when you boast with ego, you're putting your neck out there even more. And so I could tell by what they were saying, they were clueless to this other 80% of what really is available with just the Fibonacci tool. Nonetheless, the rest of the stuff I'm going to show you the rest of the night. All right. So there's some special tools and special settings. And this is all in one document at some point for you. I'm going to be quiet about that for a minute. And they're pretty cool. They are other projection techniques. There's a thing called the magic Fibo. And you're not going to find it unless it links back to me. I love how Google will do stuff. You do searches and, you know, you'll see something like, you search on magic Fibo and it's, you know, oh, there's such magic in Fibonacci, and, you know, but there's a specific Fibonacci setting called the magic Fibo. And it's specifically for corrections. So we have a move up and it's going to correct. So this is the impulsive side of a move, and here's the corrective side. And most recognizable of those corrections is the ABC correction. There's only two kinds of corrections: simple, which is an ABC, and complex, which you need the computational power of a couple of Cray computers to really label a complex correction. So what we see visibly very often is these corrective moves. So the magic Fibo is used here in an interesting way. So normally we measure a run. You know, oh, I'm going to do a retracement on that run. I'm going to do, you know, I might do an extended retracement here, projecting up, right? So what the magic Fibo tool does is pretty creative. And it's just somebody sitting down doing the math, because they come up with numbers that are not normal Fibo numbers. They're Fibo numbers in relation to Fibo numbers. which is kind of interesting. So let's look at our corrective move again, or our impulsive move first. We have move going up. And now we start our correction. We see the pullback come down, and it starts to go like that. And an experienced trader, subconsciously, not even looking at it, etc., can grab that Fibo tool because they see the potential for this to be a correction. And what this Fibo tool does is you start it up here, and it has numbers on it, 72.4 and 27.6. So we start the Fibo here. And what we do, because let's say we're doing it right here, none of this exists. All right. So we grab the Fibo tool, start it here, put 1 point here and click, and we just start dragging it this way until the 27.6 line comes down and touches here. When it does, a large percentage of the time, the 72.4 line is going to be the projection for the B wave. So again, we may only be, here's the A, we might only be here. All we need is where the A ends, and we pull our Fibo far enough back to where the 27.6 hits here. If the B stops at that 72.4 and reverses at that point, wherever you have the Fibo tool at that point is where C is going to be. And it's usually within just a few. Trade Monster, have I said anything about Fibo time yet? Have I asked not to talk about stuff that I haven't talked about? You're distracting everybody. When the session's over, you can say, what about Fibo time? I'm a third of the way into the presentation. Okay? So I'm asking you guys not to put comments in the chat box unless you're answering questions I'm asking. It's very distractive for everybody else. I don't have to repeat the calculation. It's right here in front of you. We start here. These are the two numbers in your Fibo tool. We start here and drag our Fibo tool, not to a price point in a line, because that line isn't there yet. Price hasn't gotten there yet. I just drag this until the A hits the 27.6 line. Most of the time, I'd say about 80 to 85% of the time. When you do that, when you settle the A on the 27.6, 72.4 is sitting here. And you will watch price just come back, hit the B, and take off. Now, I will say this. The B is much more accurate as a projection than the C is. The C's mediocre. When I say that, what I mean by that is you're going to have about a box like this for the B and a box maybe like that for the C. Now, 50% of the time, thereabouts, it's going to be right where it says it's going to be. Wherever you stop pulling the Fibonacci tool back to, that's where C ends up stopping. The other 50% of the time, it doesn't hit there. And that's because essentially this tool works on the premise that X to A and B to C are the same length. And it's not always that way. It is a good often amount of the time, but not always. There's an equal tool that's part of that magic Fibo. And again, it does have some standard populations, 85.4, 61.8, 50, 38.2, 23.6, etc. And it works the same way, This is another way of projecting off the one wave. But it's the same kind of tool. I put it here, and I drag my Fibonacci tool this way until the 61.8 is where the one wave is. Guess what? 73% of the time it's going to pull back into that box with 85.4 in the center of it. And then onward to 3, a range for 4, onward to 5. So wherever you have that tool end up, stretching it in order to get the one wave at 61.8, that's your wave 5 projection. Kind of an interesting tool. All right. So two neat little things. You're not going to find them very many places. You can search it, and I don't think you're going to find it unless it comes up in some of my PDFs. I kind of got that from a trader who was a little reluctant to give it to me. You know, kind of one of those, hey, it's a zero-sum world, and I don't want everybody else knowing this too. But he gave it to me knowing I was a teacher and a trader. And so it's out there. Very, very powerful. Probably package that up and sell it for $99 and sell 10,000 of them in the trading world. It's that rare. You guys are getting your value. Market geometry is market geometry. There may be several series of waves in a scan. So you're not going to predict C to D like this unless the entire C to D move is a full Elliott impulsive wave, 1, 2, 3, 4, 5. There'll be, you know, in a 15-minute chart, there could be several cycles. But this is just, you know, for those that have an inkling of Elliott wave. You don't have to be an Elliottician. You don't have to be a phenom. You don't even have to be an expert. Just a little generalist. And some of this stuff will help you. I hesitate teaching this stuff unless you're far enough along with your RAS. Because you don't want to get emotionally attached to something. You want to come at everything, 20 different ways. You don't want to trust one source on your charts. Multiple confirmations. And like we've said, if you get, oh, look at this. Oh, look, the A touched and the B touched perfectly and know exactly where C's going. What happens? Your RAS says, hey, crew, he wants to get to C. So they shut everything out, stop you from doing other testing. You don't see some of the stuff that's on the chart. You even put an entry order in because you're so confident that C is going to be there. So you're getting emotionally attached to a projection. That's why we don't do projections. Don't do projections. Don't do projections. Don't do projections. Forecasts, in the sense that you get emotionally revved up about it. Anyway, that's the magic Fibbo. So there are other things in the Fibonacci world that become a little bit more complex to use. And my recommendation is to master retracements, projections, expansions, extended retracements, and fork Fibbos before you worry about Fibonacci arcs, Fibonacci fans, and even Fibonacci time zones. We have one implementation of Fibonacci time zone that I teach and trade, and other than that, they're hard to get the right place. And again, sometimes you'll put emotion into what you think is going to happen. What's RAS? Okay, for that trader, you need to go back to the Scans, Forks, and Fibbos group. And in the pinned post, there's 2 videos of interest. Well, you need to watch them all. But there's one called The Law of Spirals, and then there's one called Trader Physiology. It was the session we did last week. RAS is what's the make or break for your success as a trader. Stands for the Reticular Activation System. It's really a generalized way that I call the three sensory information gateway features of our brain. All right. So way back when I first started trading, it was the real, it was a fledgling industry for retail traders. It had only been about 4.5 years old, retail spot Forex. And so I wasn't in ground floor, but pretty darn close. Also back then, because it was brand new, there weren't a whole lot of people in it. The only people that were offering education material were current stock day traders. And in fact, I think a lot of them just took the word stock market and did a global replace with Forex and sent out their material. That's why a lot of old Forex material, you'll still come across it now and then on Google, but a lot of the older Forex material is all about day trading, one-day trades, daily candles. Because the stock guys at that time were used to end of day. So there wasn't a whole lot. You can Google Forex training and I think maybe get 50 hits. Now you get what, 50 million? So it's a pretty phenomenal growth in the industry. Quite frankly, being fully transparent, I don't know if I was starting now that I could make it compared to what I had available. See, we didn't have the BS in the marketplace. We didn't have the scammers. You had real traders teaching. I see people today, well, I'm not going to pay for a mentor. I'm not going to pay for a course because there's so much out there. Oh, they just take what's free on the internet and package it. Good luck, my friend, because 75% of what's out there as Forex material is garbage or outright wrong. And this is repackaged, and they just repackaged what somebody else was selling to begin with. So anyway, there wasn't a whole lot of stuff out there. One of the guys out there leading the way was this guy named Rob Booker. And Rob and I have since become real good friends, but I consider this guy Rob Booker. He had this download. First system I was trading, 513.62. And it was a pretty simple system. You look for your EMA 5 to cross your EMA 13, and after that happens, if price crossed the 62, you had a trade. And then he revised it as time went on, and he just did the pullback test of the 62, as you see in the bottom left and bottom right. So now Rob is an interesting guy. Over the years he's traded, had live sessions, but I think he's on about his 127th model. Hi Rob, I love you. He went through the binary options phase. He's done crypto now. One good thing, he used to trade with Jennifer Thornburg. Jennifer's a really hot trader in multiple ways, but Jennifer's good. So anyway, I had a 513.62. And in fact, I was so impressed with it, I started looking at it. Now this is later, but I'm showing you the hits on the 62. And in fact, there's a terrible job putting that slide together back then, only a couple of years back, because there was a real good pass and check right here. Price came down, went back, checked it, and took off. So I missed that one. But lots of good bounces off the 62. So anyway, we started trading that system, and some things became apparent. And so I realized something, that there had to be a reason. Now, if you don't understand 513.62, those are Fibonacci numbers. The 5, the 13, the 62 is as close as you're going to get to 61.8. It'll be literally undiscernible on a chart, even if you could put in 61.8. versus 62. So I did a 2-year study. Now, a lot of you guys come in and, you sign up at IML and you think you're going to be trading 90 days later. I spent 2 years just looking at charts. I was trading, but I'm just saying long-term stuff. And it paid off. You're going to see the rest of tonight how it paid off. So I did a 2-year study of all moving averages. Now, I'm not here to debate with anybody. You can trade whatever you want. You can quote whatever guru you want about what's the best. He said this, she said that. Whatever book you want to quote, that's fine with me. I did my own study. I looked at 2 years, 4 pairs, and I tracked over 2,000 trend moves. And I used every single moving average that was out there across the various time periods. Every moving average that's out there. Weighted, smooth, exponential, double exponential. Every moving average that was out there. The 50s, the 100s, the stuff that, institutional traders live off of. Nothing came close to what the EMA 62 does. And there's one exception, and that's on a 60-minute chart. There's a thing called the Vegas tunnel. I'm not going to go into a lot of stuff there, but they use the 144 and a 169 to create a tunnel, and the calculations they want are from the midpoint of that tunnel. So they go through this whole complex. Well, take the value of the 169 and subtract the value of the 144, and then add that value to the 144, and that's the number for the middle of the channel. Now, I was no real mathematician coming out of high school, but I just said, I could just average the two and call it a 156. And so if you ever see a 156 from it, that comes from our group. That comes from Pip Club from 12 years ago. So on a 1-hour chart, the 156 slightly outperforms the 62. 62 is great on a 1 hour. It's just the 156 a little better. Nothing else on any other chart comes close to the EMA 62. 1 minute, 3 minute, 5 minute, 10 minute, 15 minute, 30, 60, 240, nothing, 480. Nothing comes close to the 62 in terms of several things. Being the middle of the road during a trend. What is the middle of the road? Think of Bollinger Bands in the center line. Price always wants to come back to the center line. So if it's the middle of the road, price always wants to come back to it. It serves as a rolling Fibonacci. I'll show you what that is in a second. When I say it comes back to it, if price is approaching the 62, that's supposed to be 21 pips out. Jeez. I don't know how many times I read my own material. From 21 pips out, yeah. It gets to the 62 87% of the time. I built systems off that, a system called the Power 62. We created a gravity zone that was 21 pips out, 21 to 11 pips out. Here's my 62. And all we had to know, here's 34, here's 21, here's, at 113, we actually had a 10 pip zone here, so this is like 11. When price came from outside the 34, as soon as it crossed the 21, that point on, there was an 87% chance it was going to get to the 62. So this goes back 12 years, guys, when we were using a 5 pip stop loss. Very tight. It was my first indoctrination into new paradigm trading. And we'd only get, unless price went past it and came back in the same candle, in the next candle or whatever, we would only get those 11 pips. But that was 2% every trade. We just load up on pairs and look for price to come out here and start approaching. And when we got to the 11, we had that trade. This we call the gravity zone. So I built systems off it. Traded it for years. Matter of fact, when I was at FX Trainer, I had other leaders paying me to teach their team the Power 62. Because it was so successful. The EMA 62 has been used in many ways. since then. Not real powerful, popular. You don't see the gurus using it. The only people that use it are my students. But as you're about to have a woo-woo religious experience, you're going to see why the 62 is so powerful. That's just a simple EMA on close. So there's a picture of the gravity zone, blah, blah, blah. Don't need to spend any time there. So we talked about the 62. So the 62, we always make aqua so we know what it is on the 30-minute chart. It's always that aqua blue on a 30-minute chart. It's called the rolling Fibonacci because when you put a Fibonacci on a move where the 62 runs through it, price is going to interact and bounce off the 62 in the high 90s at the same place. It's a 38.2 retracement. Other directions, the 61.8. The 62, really the 61.8 moving average, is a incredible beast in terms of bouncing. And then when it goes through, we have systems and maps to trade it once it goes through. But it's a rolling Fibonacci. It serves as the middle of the road as well. It's got some unique powers to it that none of the other moving averages have. Yeah, price will bounce off other moving averages, some, not anywhere near the frequency, the 62. 62 more than double the closest competitor as far as acting as a support and resistance line. So when price finally crosses back under it and stays under it, we have a market turn. All right. So this is one of my favorite things. Traders that have seen some of my studies and some of my coursework over the years. But I love this picture. What do you know about price on this chart? What do you notice? Do you see anything consistent in the patterns or price movement? Love to take this to a naked Forex trader. You had some sort of pretty steep upward move. You had some consolidation. You had some sort of probably announcement. A little downward trend, a little upward trend. But in terms of detail, yeah, plus it rhymes with woo-woo. That's very good, Zoe. 62 and the woo-woo are the woo-woo of the 62. So sometimes, this is what I was talking about, those airwaves going on all around us that we don't know. So there's stuff going on in this chart, in this particular chart, in these patterns, that you don't see. And the first thing is going to be something called shadow bands. Now, these are not standard deviations. These are Fibonacci sequenced bands around the 62 EMA. And you will see how those bands in the 62 hold and track price. They're absolutely phenomenal. And you have to realize you've got double Fibonacci going on there. You have the 61.8 moving average, for which then you're layering absolute Fibonacci sequence numbers on. Look how late my monitor is. It's insane. I didn't get a whole lot of ooh-ahs there. Maybe I chased everybody away. You don't count. So shadow bands, a unique tool. Now, everybody that has TradingView charts is going to get the indicator to put shadow bands on your charts. It's one of the giveaways that's going to happen from this presentation. Yeah, so think about it. Oh, here you go. It looks like the most whack chart. There's too many things going on there for there to be any consistency in price movement. And yet, all you have to do is put shadow bands on the same move, and all of a sudden everything makes clear. Look at the channels of movement. Bumps from one channel to the next. Pretty cool. With hundreds of moving averages to look at, why is the 62 so important? Because market price consistently moves between Fibonacci bands based on that 62 EMA, 30-minute. We'll talk about lower time frames. No other moving average has anything similar to holding price. So those were like 2007, 2010. How about May 9th, 2018? So this was a screenshot this morning showing reversals on shadow bands. What was this on the Aussie dollar? Not standard deviations, not Bollingers. A Fibonacci-based moving average with Fibonacci sequence numbers fixed to it. Now again, some traders might find this like, I don't need that. And that's okay. Other traders, these are additional confirmation points. If you think you have a support and resistance zone and price bumps into it and you throw shadow bands on and there's a shadow band and it's touching it to the pip at the time it's hitting whatever support and resistance you're using, you've got a good confirmation for your trade. And these work on 30-minute charts. We can actually, with the shadow band tool I'll give you, you can put the shadow bands on your 30-minute chart, or you could put the 30-minute shadow bands on a 15-minute chart, a 10-minute chart, or a 1-minute chart. You can also put, since the 62 is the turnover, and I haven't really taught this to our current group, but you can put shadow bands on with the local 62, meaning if I'm on a 5-minute chart, I can put 5-minute shadow bands on. It's used more for burst trading, what we call burst trading, 5, 10, 15 pip trades. But great for bounces. Absolutely great for bounces. So I didn't want you to think, because some of the slides were 10 and 12 years old, that it's stale technology. It's not at all. It's just starting to take off. That's all, people just starting to find out about it in larger numbers. All right. Here's the thing that's really going to blow you away. Well, if it doesn't, maybe it's too big of a buildup. If it doesn't, go watch Forex 101. No offense. So, we tracked many things in this 2-year 2000 trend move study. I was testing Booker's use of the 62. And I wanted to see if I was going to use it, not just because he had a system that used it, but because I wanted to know the 62 was really the thing. So again, as I said, traded all, mixed all the moving averages up. Put shadow bands on all the moving averages. I had also read the Vegas tunnel and studied the Vegas tunnel for quite a while. And I'm not, look, don't go to Google, search down the Vegas tunnel and try and make sense of it. I know a lot of you are doing that right now. But don't. So, one of the things I noticed on that 30-minute chart with the 62 EMA, there was very frequently, now again, remember, I was looking at Booker's 513.62 when I did these studies. So there was an interesting thing that happened. I noticed that when so I want to advance the tape and then I'll rewind it to come back to where we are. So I'd been trading this for about 2 years. I sent Rob a couple emails with some of this stuff, and he was like, ho hum, yeah, that's pretty cool. And then I met up with him at a, oh wow, it goes way back, an FXCM conference. A 3-day conference sponsored by FXCM. So it was like coming home for all of those initial traders that got way back in the early days. So now we're 3 or 4 years into it. And so I finally met up with Rob and I was showing him this stuff and he was pretty blown away. But he was teaming up with Jennifer and they were doing something else at the time. So he really didn't have any interest in it, although he was pretty amazed at it. So because I had that 513.62, I was looking at the point where the 13 crossed the 62. There had to be some reason that was an interesting intersection. And so I don't know, got a wild hair one day and I started measuring from that point. And in my 2000 trend moves, the frequency of a 144 harmonic, meaning from this intersection of the 1362, price would find its way 144 pips up, stop, and reverse. And when I saw it like the second time, I was like, what? 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 And then the third time and the fourth time. So I said, look, why don't I just pretend that's a move? Why don't I just pretend the 13 cross going 144 pips is my move? Because I want to be able to determine targets along the way. So yeah, this was a little bit the brainiac part of me. So what I did was I put together a spreadsheet and every move was the same, 144 pips. Well, what's 14.6? So we took a harmonic, which happens to be a Fibonacci number, and now I'm going to apply a Fibonacci percentage against it. And 14.6 times 144 is 21. Interesting. 23.6 times 144 is 34 pips. 38.20 times 144 is 55 pips. These now become what's called harmonic targets. These are my harmonic targets from a 1362 cross. And now we have that automated. We used to have to do it manually. Now we have it automated, and you're going to get that. Actually, you had a chance to get it because it's included in the INS I distributed 2 weeks ago. But this is where they came from. So that INS indicator for intraday navigational system, intraday potential support and resistance, has these in them. But this is how they came about. And you see all the dynamics of Fibonacci. You also see what I call derivatives. Once I got past 100%, I just repeated the cycle. 114.60, 123.60, 138.20, 150, 161.8. So the major numbers, you get nice, well-known Fibonacci sequence numbers. 144, 233. And all of these are Fibonacci up to here. The 110 is not. The 123 is not. The 165 is not. The 178, the 190. But yet these are so powerful because they're based what? How many Fibonacci's are involved? We got the 62, so there's one. We got the 13 crossing it, there's two. We're taking 144 as a standard harmonic move because it just appeared so frequently. Then, so I got the 140. Then we're applying a Fibonacci percentage against it. So there's 4 uses of Fibonacci to derive these numbers in the right-hand column. Now, you just have to take my word, and you won't have to trust it too much, but just take my word. This is unedited. So we have our 1362 cross. Calculations take place at that point. 21 pip line, 34 pip line, 55, 89, 144, 233. I think this is the oldest slide I have. 2006. This technology's been around 12 years, and you guys are just hearing about it. Pound dollar, 30-minute chart. 21 tag, 34 tag. It did pass the 55, but it packed it. Pass and check, turn around, took off to the pip 89, comes back 55. Now, in more modern times, we also have the 72 in here. You see, it tested it a couple of times. That 89, a lot of you guys that took the pitchfork class, the one instructor, Brian, my coach, coaching partner at the time, used to say, I only have to trade one thing in the forex and I can retire. I'll just trade 89 bounces. 144. It did tag the 233, but a little consolidation. It did come up and tag it again to the pip. But that's amazing. So I got some aliens on here for the woo-woo effect. I didn't know what else to do. Okay. Now, here's something that's kind of fun. What did it take for price to tag that line to the pip? What did it take? It took adding 144 to this point in the cross. But how do they cross? What's a 64 EMA? Let's do a quick pop quiz. On a given chart, if you have a 64 moving average, how many candles back is it going? How many candles involved in the 64 moving average formula? Yeah. What famous city in Maryland is named after Lord Baltimore? Okay. So, yeah, 64. So, somewhere back here, candle minus 64 to this candle right here is saying, I'm going to close at this value. So in 64 candles, I'm right here with my 64 EMA. The 13 EMA said the same thing back, 13 candles back. I'm going to close at this value. So 13 candles from now, I'm going to be right here And these two guys have to be thinking alike because they're meeting at the same spot. So at that spot, I can add in 89, 144, 233 and create these bounces. So these to the touch bounces, these absolute to the pip hits, were thought of way back here. Those are harmonic targets. What time is it? Holy crap. All right, let's get into scans. You're all a part of IML. One of the features of your Platinum package is use of the IML harmonic scanner. And all I can tell you is the D is the hottest zone on your chart for a reversal in its given area. It is absolutely the hottest reversal zone. Taming it, well, that's another story. Now, this is a slide right out of our quickfire training. But that D is the hottest zone on the chart. And if you're not familiar, this is big Fibonacci stuff because all of the Fibonacci's in sequence, when they're layered on top of each other, create this zone. Fibonacci retracements, Fibonacci extended retracements. Multiple in one zone. It makes it very, very hot. It's all Fibo, baby. This is why I trade pitchforks. It's all Fibo, baby. Now watch this. What I'm going to tell you here is that every swing high of notice, every swing high and every swing low is a Fibo derivative of something that took place in front of it. No exception. Price turns on Fibonacci. So if I look at this chart in the upper left-hand corner and I do a Fibo on a swing down, lo and behold, the swing high for that next period is a to the pip touch Fibo. Oh, okay, little luck. I'm going to project off that same swing. It creates 1, 2, 3 turns. Not enough, you say. Fine. Let me take that same move that went all the way down here, projected it, and do a retracement on it. Oh, guess what? 23.6 to the pip. Let's come down one more swing. We'll go from here all the way down here. Oh, guess what? 38.2 to the pip. My point being, every swing high and low on the chart, every friggin' one of them, is the result of some sort of Fibonacci action in front of it, bar none. What does that mean then about pitchforks? It means when you draw a pitchfork, if you don't know what a pitchfork is, you use a swing high, swing low combo to draw a pitchfork. Don't worry about how to do it. I have a whole course I'll give you on it if you want. Just come back to my IML TV session. But that means this swing high, which is already the derivative of a Fibo action in front of it, and this swing low, which is already a derivative of a Fibo in front of it, it means these things are just like, I say they're like neon signs, the old neon, not the LED ones, but the old ones. Just full of Fibonacci-ness. These lines are just full of Fibonacci-ness. My term. Because the entirety of them is based on points that are Fibonacci derived. And some traders who thought they knew what they were talking about the other day think of Fibonacci as the little tool that you do retracements with. You all kind of getting the idea that there's more to the charts about Fibonacci than just the little Fibonacci tool? Not that that Fibonacci tool doesn't make you a lot of money. All right, so we're going to go through some forks real quick. Again, a little bit more modern time, 13 March 2018. I've got hundreds and I can't show them all, so I just, I literally randomly pick some. Now we got a little bit of a fun thing going on here where we got a fork, we call it a BS fork because it was before the scan. All right, so now we have something called Charlie Delta. And again, this is right from the Charlie Delta training. And Charlie Delta is a very special pitchfork we put on a harmonic scan. We use the C and D termination points of the scan and do what we call a traditional pitchfork. We take that back to the X. That's called a traditional pitchfork. We've done something special here. We've married a harmonic scan, which, as I said, as you approach the D, is the hottest zone on the chart possible. We then marry it with a traditional pitchfork, and you have some golden moves. And what's going to happen, and I think I say this later on, I don't remember because I put this together over a week or two. But what happens is, no offense, Christopher Terry, we use new scan paints as alerts to draw pitchforks. So yes, we can quick fire trade this, but we're going to get 2 to 3 to as many as 5 trades off our Charlie Delta suite of forks. There's just nothing hotter on the charts than a Charlie Delta pitchfork. There is nothing hotter on the charts. And as it's a traditional pitchfork, once it's drawn, the very first bounce off one of these 3 lines we can take as a trade. And the second, third, and fourth bounces as well. This scan, you might have, maybe it went all the way down and you got some good pips off of it, but then you threw it away because the scan was done, did its job. Maybe it came down here a little while and went up and stopped out, you threw it away, or it was poofed off the harmonic scanner. We've moved that scan to our charts, and we're trading the hell out of it with Charlie Delta. It's the most hottest zone. Now, imagine layering your harmonic targets with your pitchfork to create other lines. So when you have a harmonic target that actually hits here, you've created an energy point that there's just nothing like. And price is going to go very impulsively out of that energy point. We also have what we call the X-ray alpha. The X-ray alpha is a best fit because we don't have anything to put that median fork tail on. So we swing it up and down. Our first choice is to have the top of that fork hit the D. So now we have forks going in 2 directions. And as you'll see, there's more opportunities for these forks to give multiple lives to that scan. On average, we'll get 2 to 5 trades off a scan. You want to talk, well, I won't say it. I just wait. So either swing it to where it's up at the D, or we'll swing the bottom of it to be down to the C. Either way, it's still an XA. Either way, it still has the central pivot point here. It's just the angle we give it. So it's either the C or the D. And we'll adjust that over time. See, trading pitchforks is not about, oh, let me get in there and make a trade. I got to draw a pitchfork. Trading pitchforks is setting traps. We're trap traders. That's why the old paradigm, they hunt for trades. We trap trades. And let me tell you, trapping's a lot more fun than hunting. We also have things called BS forks, before the scan. They could be long and existing, persisting forks already at play, and magically you'll see your scan open up inside that fork. It won't always give you two touches like C and D, but it might give you the C, it might give you the B, it might give you the X once it finally paints. So that will continue to give us, so we have three pitchforks associated with the scan as part of the Charlie Delta family. Very hottest zone on the chart. It's absolutely the hottest zone on the chart. So now some scans outside of diagrams, actually on charts, and I drew these just on the harmonic scanner, 13 March. So we have a Charlie Delta pointing down. Notice CD goes back to the X, traditional fork pointing down. And then we have an X-ray alpha where I use the D as the setting point. So now we've got two. Now we're just ready to trap trades inside those forks. Don't ask how. You need to take the course and the Charlie Delta course. So take the pitchfork course and the Charlie Delta course. Both free to you guys. Pretty amazing. So Alan Andrews, when he did all his pitchfork work and his observations, he said, if price breaches the fork. Now, so you know where the fork is here on this chart. It is this gold thing right here. When price breaches the fork, the first place it's going to go to is a warning line. And a warning line is nothing more than a half channel. So if we go from the median to the outside, it's a half channel up. And that line, that warning line, will maintain the same angle as the pitchfork. So this is one of my Telegram posts. And this just reinforces what Alan Andrews said. If price breaches the fork, first place it's going to go to is a warning line. To the pip. Comes back in the fork. We get some nice touches inside the fork. Outside touch. Median bounce. But look at what it did up here when it breached the top. Warning line to the pip. I mean, you couldn't have something that's more accurate. Now, does it do it all the time? No. What happens when it doesn't? I don't trade anything. It's setting a trap. If you set a trap for, raccoons or beavers, you're a trapper, and you go out the next morning and there's nothing in your trap, oh well. If it's consistent like that, then maybe I move my traps, but, nothing ventured, nothing gained. There's nothing. We're not doing entry orders on any of this. So how do you trade it? Price breaches the fork. Guess what you do? You draw one line on your chart, and you put an alert on it. Maybe 5 pips in front of the warning line. It's that simple. Trap. There's a real-life example of how warning lines work. Warning lines, because this is a swing and this is a swing. Warning lines have the same Fibonacci-ness that all the lines of a pitchfork have. So here's an example of an energy point. Energy point is when you have a diagonal intersect by a horizontal. There's only one candle that can touch that point. So we have what? A Charlie Delta fork, and then we have an X-ray alpha fork in green. I know it looks a little busy. Newer traders are like, I can't follow. So the X-ray alpha fork is here. Notice it didn't come down here. The X-ray, or it could have been a BS. I'm not sure which it was. I don't remember back. But it wasn't the Charlie Delta. And so here is the warning line. As price leaves that fork, there's the warning line. We did a fork Fibo. And at the 146, as you can see in blue, hopefully you can see it. There's a 146. So a to the pip touch of the warning line, a to the pip touch of the 146 Fibo. That, my friends, is a trade. When you combine this stuff, that's what I trade. Just another example of a nice fork, a best fit fork that gets set, meaning I'm moving this up and down as price action is. I got a nice swing here I want to look at because price looks like it could go up from there. May continue coming down this way, but it looks like it could go up, so you draw it as a possibility. Price starts going outside the fork. Hit. 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 Now I've got my fork set. Price then comes down, as you can see, to the pip touch. I'm in my trade. Now, one thing you have to understand here, I don't know who's got good eyes. What's the distance there? Can we see that? Okay, well, I'll give you the numbers. This is 1.5100, and this is 1.5200. You want to tell me the width of the channel again, please? I know it's hard to see. $100 pips. 100 pips. So I put this pitchfork on my chart, and every morning I come and adjust it. I finally get this third perfect to the point touch. I've set my fork based on the two previous, and now this one touch it. This is tradable. This bounce is now tradable. 100 pip is where it's at right now in this picture. We go from down here to here. Well, actually, we're probably about 110 pips. 110 pips, when we put 2% into our 10 pip stop loss, which is what we do, because look at the precision you have of the entry. This is magnified. That's a 22% return on our account. Just over a couple days. Might have taken 5 minutes to put the pitchfork on, and all the time I spent adjusting it, maybe 5 minutes, waiting for the trap after the fork's been validated by multiple hits to the pip. One hit right there, we're already at 22% return. All right, there was a question. I want to go back to the previous slide because I don't really want to do this, but I don't want to leave anybody hanging. This is the 146 Fibo. It's not a warning line. This is a fork Fibo of the CD move. Here's the Fibo right here. %, goes up. 127, 141. That's the 146 Fibo. That's the blue line. 146% of the CD move. The warning line is diagonal to the fork. All right, keep going. In addition to warning lines, we use these things called Fibonacci inside the fork and outside the fork. So here we have the gold fork, and you could see these gray lines, hopefully, outside that fork. Those are Fibonacci-based lines, meaning 127.2, 138.2, 141, etc. So sometimes we'll use warning lines, sometimes we'll use, how do you know which one to use? Put them both on and see where you're getting the compliance with. All right, so here's a triple energy point. I mean, energy points are very strong. As I've said, you almost always have a very impulsive move out of an energy point. I mean, can you find a more impulsive move on the chart? In a series of candles, it's not like, 3 candles to make up a... So, triple energy point. What is the triple energy point? First of all, swing low to swing high, back to a previous swing high. That's a traditional fork. It's set from the get-go. I can trade it from the get-go. Meaning, from right here, I can trade this fork. So we have the green line. We've got a Fibo from a previous big move. That could be a fork as well, pointing down. We got a Fibo from there to the 115. And there's a triple trend line. There's a trend line, 1 hit, 2nd hit, 3rd hit. So there's 3 points here of intersection. The pitchfork bottom, the 115 Fibo, and a trend line. All intersecting at the same spot. There's only one candle that can hit that. And look how impulsively it moved out. So you trap. Those moves are worth it. I can't even read. I think it says 57.9. 57.8. Whatever you want to call it. 50 pip move. 10% return on your account. I mean, how many traps a week do you have to get to be making really good percentage when the month's over with? So, talk about additional trades off the X-Ray Alpha, Charlie Delta forks. Maximize your platinum membership for that scan. The scanner's part of your platinum membership. But instead of getting 1 potential trade for a scan, what if you get 3, 4? Okay? And there'll be plenty of times where the scan trader can't even take the trade, as in this case where the D doesn't come down to the entry line. They can't even take it. I got to pick it up a little bit more. Another triple energy point. This was fairly recently, 26th of April. Harmonic targets. That's the harmonic target 233. Right there. The gray line is a warning line. Check this out. At the 6 point, not 6 point, not in 0.68, but 6.8 extension from this fork. So these are huge external Fibo. 6 point, look at that fork way up there. Oh, price has left it. I guess it's no good anymore. $6.81 out. Pitchfork, harmonic target, triple energy point. So again, we talked about extended retracements. We also talked about projections. And so here's a good example of a projection inside the fork. I look at that first major wave. I call it a major wave after it starts pulling back substantially. I could see where it terminates. I could project off of it. 190.2, it's one of our projection values. And our pitchfork, you have an energy point. Look at the impulsive move out of there. Trap trades, trap trades, trap trades. Don't hunt trades. This is one we went over Tuesday. It was just a lot of fun to look at. 3 different pitchforks we had on there. It left the first pitchfork. We came down here, drew this yellow one. It left the yellow one. You know, came in this area. We drew the green one. And then we were away for a couple weeks. We came back the other day. And look when it left this upper fork, where it comes down and tests the upper parallel of the existing fork. Look it up here. There's a pack move. Big one. Left the fork, comes down in here, turns right around, comes up and tests the fork to the pip before coming down. Just the amount of what we call woo-woo will just blow you away with pitchforks. All right, something else that's Fibonacci based. So as I started trading more and more and more and teaching, we developed, as you know, this INS system, which is just a conglomerate of really strong support and resistance systems. And one of the original things that we had in the system, because it was one of the main things taught in the world, was pivots. Oh, trade pivots. So we had pivots on our charts for many years. And then I said, this is crazy. Everything we do is Fibonacci. And so I found some Fibonacci pivots. We put the formula to work. We put them on the chart. And then we traded them a couple years alongside pivots. And by a factor of greater than 2 to 1, Fibo pivots yield more hits than pivots do. So guess what we did? We dropped pivots. And we kept Fibo pivots. That's part of your INS package that you got 2 weeks ago. So those are Fibo pivots. It's pivots with a Fibonacci formula applied against it. Really strong. Another thing of Fibos. Fibo time. The only Fibo time thing we really use, and this is right off one of Christopher Terry's swing trades that you guys get, every other day, whatever. And he explained when you have these, he called them a coil. It could be a triangle, it could be a fifth wave diagonal, but let's just call it a coil. And so you draw out, you don't leave it short, you extend out the lines that capture that coil. You turn your Fibonacci timeline on 0, 1, and 0.75. So here's my 0 line. Here's my 1 line, or 100 if you want to call it that. The red line is 75%. So what Chris said was, when you have these kinds of coils and you extend your timeline out to the intersection of those lines from where the price first enters that coil, here's the vast majority of the time where the trend's going to break, where the cone's going to break. That's right from Christopher Terry's swing trade. You guys got to watch those things. I've been trading 15 years. And I still watch every swing trade he puts out. A lot of the times, like, yeah, I know what he's doing. Yeah, I know he's doing. And then there's times where I go, wow. So this is a little trick I picked up from Chris, just whatever it was, 2 weeks ago. Pretty powerful. Fibonacci time. All right, so here's what we did tonight. This is what we've been through. Fibonacci retracements, Fibonacci projections, Fibonacci expansions, Fibonacci fork Fibos, Fibonacci extended retracements, Fibonacci arcs, fans, time zones. We looked at the 62 as the rolling Fibonacci. The 62-based Fibonacci shadow bands, Fibonacci-based harmonic targets. Clusters, I'll explain. Fibonacci pivot points, Fibonacci-based harmonic scans, Fibonacci-based pitchforks, Charlie Delta pitchforks. It's got that Fibonacci hotness like nothing else on the charts. And energy points. 2 hours, that's a lot of training. Yeah, is that all? So let's talk about clusters really quick. The specific of a cluster is intended to be with Fibonacci. And what we mean by that is, well, let me just go see if I can find some. So hold on a second. All right. So the first thing I want to do is draw a pitchfork. And for those of you that have been through my course and coming to my sessions, we're about to finish up. We only got 5 more minutes, so hang in here. Don't leave just yet. And so, you know, the thing I would look at here for a fork, since this looks to be a downward pointing channel, is, unless I expand it to show more, but I want to be able to see like values, you know, wicks and whatnot. Oh yeah. The guru can't draw a pitchfork. I love it. All right, let me turn on my magnet tool here. So I think I'm going to look at this as a swing because I like the way it points down. And I'm going to turn my magnet tool off so I can swing this now. And I'm going to try and get this. No, don't move on me. There we go. It's looking like I might be able to squeeze it in there. Pretty damn good. Ah, it drifted on me. Pretty damn good. So there's a fork live. We just went to it right out of the gate from the swing high. Boom. Love it. Okay. Nice touch. We breach. Couple of touches. Nice touch. Nice touch. 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 And then, look at this. Boom. Boom. So we got an outside touch, essentially, as we would call it. What is this? 30 to the pip. Okay. If I could boot some people, I would. So I've got my pitchfork on there. So now let's talk about Fibonacci clusters. Let me look at this with my eyeballs for a second. Okay. So the first one, let's turn on my Fibo tool. I'm going to go up here. Don't worry about where those Fibonacci's are going to for now. We'll come back and fix that. All right, so I'm going to go ahead and get in here and format the... I just want a simple retracement. Okay. So what you see is right here 50%. So I'm going to do is get a trend line tool and I'm just going to draw right on top of that 50% line the best I can. Oh yeah, hold on. Got my magnet still on. All right, so there's my hit at 50%. And remember, I said we could, when I said it's all Fibonacci, baby, and I was saying you literally go to the charts and put any Fibo anywhere you want. So let's draw another one. And this one I'll come way out. Maybe I'll pick this nice big swing on this wick. And I'm going to come, oh, come on. And I'll come down to the swing on this wick just for fun. And what you have there is a 23.6 retracement that's sitting right on top of the previous 50% retracement on that white line. That is called the Fibonacci cluster. When I draw multiple Fibonacci's and they land on the same point. It could be from different timing. I could put a 1 hour Fibo on a bigger swing, and if one of the lines lands on top of one of these lines, it's a Fibonacci cluster. It's part of the dynamics of Fibonacci within itself. But they're good resistance, which is why not only did it bounce it there, but it bounced it there at the pitchfork. That's a Fibonacci cluster. 2 Fibo lines on the same. So I'm looking at this and I'm like, well, dang, this would have been a nice trade. This would have been a great trade because it goes all the way to the opposite end to the pip. Notice the swing low of this move was the top of the fork here. So it's a 2-pointed trend line, but you can't trade it as a 2-pointed trend line. You need the third point. But you can trade it here because you have a energy point of the fork diagonally intersecting that line. So I'm comfortable with the set of the fork, you know, with all the hits that we have, and these two. This one was just off for whatever reason. But is it? Let's find out. There's some, because you know what? The biggest lesson I want to teach brand new traders, price does not turn in black space by itself. Something forces price to turn. So one more use of Fibonacci here that we haven't done. And that is we need to do our fork Fibo. So one more time, we're going to put a Fibonacci on here. And this time I want to go from the swing low, and I'll just draw it kind of crooked so you can see where I'm going with it, to the swing high. Tell you what. I'm going to go ahead and remove the others because I taught that as a lesson, or we got that point across. I don't want to mess it. I don't mess with anything else on the chart for now. Now it'll be a little cleaner to do our. Oh. So now we'll do our extended retracement by doing a fork Fibo. So it's a fork Fibo inside, you know, are based on a fork. So we're going to call that an extended retracement fork Fibo. Except we got to put the template on for fork Fibos. Oh, looky, looky. It didn't make it to the bottom of the pitchfork, but 261.8. Give me a new, let me make sure I got this correct. Yeah, it was a little low. No, I don't want to make it high. Come on, get it just right. Low candle wick, bottom of the fork. Boom. 261.8 to the pip. 261.8 to the pip. But wait! I gave you guys a treat the other day with the INS. We talked about harmonic targets. I'm going to turn my INS on. Harmonic targets. And that target lays right on top of the 261.8 so much that you can't even see it. It's that to the pip. Thanks for teaching the class, Alan. Much appreciated. Jeez. Right to the pip. So there was no pitchfork trade, but we call this not a Fibonacci cluster. We call that an HPR. Came up with our own rival name for Scott Carney, and to avoid trying to call it a cluster, because clusters are really Fibonacci based. A high probability reversal. So when I have two or more potential support and resistance lines on the same line, within a pip usually, we call it an HPR. And that, my friends, is pitchfork, Fibonacci, Fibonacci clusters, harmonic targets, fork fibos, HPRs, all on one chart. So I will conclude by saying this. I'm working with another group, and they told me it was going to take a little while. I was hoping it'd be ready by today, but they're not. And I can't explain what that's all about. But I do have a very special sort of gift for you, but it's not ready to give you. So it'll be given to you probably a link to get it will be given to you within a week. It could be tomorrow, but I'm just going to be, under promise, over deliver. And yes, it's blurred out for intentional purposes. So what that represents is 15 years of Fibonacci. There are numbers there you've never seen before. You've probably seen some of them in play tonight, wondering where in the hell did he get that number from? And what I've done, for those of you who are TradingView traders, I've broken it down by various elements such as pitchforks, projections, harmonic scans, Elliott wave, standard Fibonacci, and put the Fibonacci values in there and ratios, which you can then set up templates for. And I'll show you those templates and how I did it. If you don't use TradingView, whatever chart you're using, if you can set ratio sets and save it. Motive wave users, I don't have any motive wave users in the group, but we used to have a bunch of them, can do it. MT4, you're probably going to have limitations, but my traders typically all trade TradingView, just FYI. Chris Terry does his swing trade of the day on TradingView charts. The harmonic scanner is on TradingView charts, and the web analyzer is on TradingView charts. So because they are probably the best charts out there, in addition, what I really like about them is they're web-based. So if you have any interest in TradingView charts, go to my group. Oops. Which is iMarkets Live Scans, Forks, and Fibos. Sign up, and you'll get the link for all sorts of videos, including our Telegram group, including information on TradingView charts. So go through us for your TradingView charts. Doesn't cost you any more. Well, my friends, that is your Fibonacci session. I appreciate those of you who have hung around this long, those of you who got up in the middle of the night. Hopefully you got something of value. Now, as follow-up to this, which I probably somehow deleted out, I'll just remind you, I'm here every Monday and Wednesday at 9 p.m., Tuesdays at 8 on the crypto side. And what we do then is going to teach you how to use all these tools and how to trade with them and how to make money with them. So back to those traders who were hot stuff in their own minds and thought Fibo was 38, 50, 61, 8. Wow, they're missing out. It's 8:21 my time, which means we've gone 2 hours and 21 minutes. And Dallas said right before I started, just make sure it's not one of those 2.5 hour ones. And I said, oh, don't worry, it won't be. So this will be, it's being recorded. It should be uploaded to the recordings at IML, probably, within the next 24 hours usually. Sometimes they put my Forex stuff at the crypto recordings and vice versa. So just get to the Scans, Forks, and Fibo page and ask if it's uploaded yet, and you'll have 50 people tell you whether it has or hasn't been. I do not control the uploads. That IML does that. I'm in a broadcast studio for the computer. It broadcasts out to a very designated kind of server. IML picks it up from there. They present it in your IML TV box there, throw a chat room on top of it, and they do the recording and uploading. So with that, I appreciate your time. I'll remind you, life can be short, so for all those people you care and love, let them know you care and love them. I love you guys for carving some time out tonight. I really appreciate it. This is our 4th and last spring study session. I hope you got value. We did how you really make money trading. We did the intraday navigation support system with all its components. Roxy telling me I better shut up. We did trader physiology and covered the mindset and how the brain actually works. No, you're not different. Your brain works exactly the same way. So you best understand how it works. And tonight we covered all that is Fibonacci on the charts. I hope you enjoyed these 4 sessions and got some great value. And we'll probably have a fall series again of 3 or 4 weeks of just intense training. See you guys in the Facebook group, and see you guys next Monday in Scans, Forks, and Fibos. Have a great weekend.